Hi, this is Saev Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexBSummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexBSummit.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our euro currency analysis. So you can see the overall trading process. It's really very interesting here because of the lots of events now are happening on markets. So the halfway stand behind, the Fed also behind, and now we're watching for payrolls and Bank of England meeting. Currently, based on expectation, at least that I see in consensus forecast, that expectations that Bank of England keeps the rate the same without any change. So it means that impact on the market could be more significant as the rate will be changed. Speaking on the Fed, well, we will take a look in-depth analysis what Jerome Powell said. Now, weekly report as usual, but in two words speaking, they just let us to know that the tapering is not the tightening. So it's two different things. And overall approach of the Fed to the current situation looks very soft and dovish, because until the suggested tightening, the balance of the Fed still increased for approximately $400 billion, because it will be gradual contraction of the bond purchasing. So in this very gentle approach to the markets, very careful approach. And overall comments from the Jerome Powell and the Christine Lagarde, this was mostly content the message that hold your tightening horses. So do not expect too hawkish behavior. And investors were pleased by the statements from the Bank of Canada, from the Reserve Bank of Australia. So it's just starting to go in habit with these statements. And that translates to the expectation of the Fed as well. But recent comments from the Jerome Powell said that this is not the case, and don't be too aggressively tuned on the performance of the central banks. And you can see performance on the euro currency as mostly, well, it's natural, normal reaction. So tapering has happened. This market shown some minor bounce. Actually, currently on the euro currency, the one thing that is interesting. What will happen with all these grabbers that have been formed before the Fed? And because, guys, here actually, in fact, market is forming this really tight consolidation. Inside this big one that we see on the weekly chart, like the flag, which is actually bearish, you could see that here we also have some a bit minor consolidation, shape of the pennant or something on that sort, that potentially also looks bearish, although we have a lot of grabbers inside of it. So, and when we have the two sideways action after this drop to the downside first and to the up, would we say that the bullish and bearish scenarios haven't worked? Well, I would say no, because if you have some intelligent approach to overall situation, that lets you to be really flexible with the assessment and act depending on your view. So those who have the bearish view have step in accurately with the possible move to the stops to the break-even. Those who bought yesterday also was relatively successful trade. So because if we take a look at the hourly chart, how this has happened, that's actually the points that we said that somewhere from this level upward action should start. Please stop below these lows and just watch what will happen. So you can see overall reaction was very good. So in general, here you could even move stops to the break-even or fix some profit based on your view. But in general, despite the market right now is dropping, we can't say that this was absolutely losing predefined setup and that hasn't worked. It's in general, it has worked nice, as well as initial entry on the short side to the market. So currently, what we intend to do on the euro. Here, yesterday we've got another bullish grabber. It's almost bullish reversal session, and in fact, despite that some type of the bearish consolidation is forming, it doesn't mean yet that market can't proceed slightly higher. just because we do not know what the Bank of England tell, and in particular what numbers will be on the non-farm payrolls. The ADP report was relatively positive, but in recent time the correlation between the ADP and the non-farm payrolls has been broken, so they are not now perfectly correlated, so its difference exists. That's why until the grabber is valid, we would say that the bullish context still valid as well, and we could get at least some upward continuation. Although the grabbers actually suggest that market should take out of this top and erase this drop. So on the 4 time frame chart, if upward action will be continued, we could keep an eye on this ABCD pattern. That could lead market back to the 1650 major 618 resistance right here, the completion of this ABCD. And now market with this downward pullback, actually guys, we need to control these two levels. First is a 1585. This is confidence support. After acceleration, and if we suggest that market is still bullish with the grabbers and so on, market should stay above this confluence. This is really crucial level. It is not invalidation point. Invalidation point for all grabbers that we have stand for initial grabber that we have here. It's probably right below these lows, while for the second grabber, this one, invalidation point stands right here. So, but the logic is very simple. So if confluence area can't hold retracement on the bullish market, because here as you can see, well, nice thrusting action based on the Fed in general, impulse and momentum here looks not bad. So if the confluence can't stop the retracement, what the chances that the just single level will stop it? And if market will break this confluence, it means that, well, the chances will be significant that market will drop first below these lows and erasing first grabber, and then it will be aimed to the erasing of the second grabber. It means that the bearish context starts to take the lead and starts to work. So that's why this level is very important. If you still keep the long position, you need to move stops to the break-even and watch what will happen here. If you would like to step in a bullish trade, that's the level that you need to keep an eye on. So, because you could try to take position right at the confluence, with placing stops somewhere below these lows. So be very, very small stops, around 30 pips. That's what about the bullish context. For the bears, well, here, actually, currently, it's not very comfortable moment for taking the short position, because if you haven't taken it again right at this retesting, which I have the doubts that you have done it, because it was, well, very difficult to suggest that market will start bouncing up down from here. So it means that probably you do not have any shorts, because this initial short has been closed on the break-even. In the current circumstances, it would be better to wait and see what will happen, because currently we do not have yet clear signs of the bearish continuation. If market starts dropping below this area and erase this rally and some grabbers that have been formed, well, in this case we could consider taking the short position again. Or if market will complete this ABCD, or even maybe taking out of this top complete the grabbers, so when the upward action will be over. So these two moments that we need to keep an eye on for thinking about taking the short position. So it seems that today and tomorrow we probably should wait a bit and see what will happen. Well, maybe non-farm payrolls will clarify the situation depending on the reaction. That's actually what we have on the euro currency, so let's keep watching. For the bulls, setup still in place, and you could control it with these levels that we have specified. For the bears, well, it seems that in the current moment it would be better to wait and see what will happen.